Hi, this is Joseph. Today we're going to review the 4 trades that we executed, which were HL30s. The HL30 is a technique that I teach inside of my trading course. It's one of the easiest trading strategies you're ever going to learn. Very, very simple. Only one indicator is necessary for this one. This is the CCI indicator that you see down here at the bottom. Again, this technique is called the HL30. And it's one of the first lessons that you're going to learn right away in my trading course. Let me show you just how easy it is. Now, today we have a total of 4 HL30s. You can use the HL30 on other currency pairs, for example, the pound yen or the euro yen. But if you just use it on the 4 majors, which is what most of my coaching clients use it on, I'm going to show you those. We had a total of 4 trades on the 4 majors, earning 160 pips. No losses, very, very easy. You can see just how easy it is. I'll show you the setup. So the HL30, if you watch some of my videos, you'll know that what I'm doing with this particular strategy is basically trading off of the previous day's high and low. So I'm going to compress the charts here for a moment, and you can see this is Friday's trading range. We have the low, we have the high. So before the market opens, you can have all of these levels identified, and there's the start of the new week, the end of last week, and then we move right into Monday and we wait. Now, we have to wait for price to reach a specific level approaching the previous day's high or low. That's going to be the first qualification step. After that, we wait for a reversal candle pattern, which is exactly what we're looking at right here where I'm moving my cursor. Now, this candle closed right there at 1.1310. We use a 20 pip target and a 20 pip stop. Now, I'm not going to show you where the stop is because it's just 20 pips above the entry, and it never really came into question. It never really tested. It didn't do anything. It just sort of dropped right down to both of these targets. But let me explain how we maximize and earn a total of 60 pips on this trade, 60 pips from the entry. So what we do is we execute 2 open orders. 2 open orders. I'm going to close the first open order at the first 20 pip target, which you see here. Once it hits that first 20 pip target, I then set the second open order at a break-even stop loss. So that way, even if the second open order doesn't hit the second target, if all it does is hit the first target and it turns around and goes back up to that break-even stop loss, I protect the profits here of the first 20 pips. You need to lock that in. You need to get paid on your trades every single time you do this. It's almost always going to hit that 20 pip target if you do it correctly. But if on certain days, if you do it the way I'm showing you, you could earn another 40 pips. So let me walk you through the second half of the trade. So the second half of the trade, again, we still have a second open order. We've already locked in profits, the first 20 pips on the first target. We traded to an additional 20 pips, which took us down here to 1.1270. The first target was 1.1290 with an entry of 1.1310. So again, from the entry to the final target, that second open order moves from 1.1310 all the way down here to 1.1270 for a total of 40 pips. But on the first open order, we earned 20 pips. This is a total of 60 pips. Now, some of my coaching clients, when they first learn this strategy, they'll just trade it with one lot and they'll trade it straight to the 20 pip target. No problem at all. If you did that, for example, you would have earned 80 pips today. But again, we earned 160 pips just using it on the 4 majors. Let me show you the dollar Swiss. So the dollar Swiss did pretty much the same thing. Here's Friday's low. Here's our reversal signal candle right here. That gave us an entry at 0.9212. So the first target, I moved this up just a little bit further. And you can see this one took us to 34 and then 54. That was our final target. So again, we earned a total of approximately 60 pips. Now it stays within this range on certain days. This is sort of a typical Monday, I would refer it to it, the way it moved. It kind of bounced off of Friday's low, approached Friday's high, and then pulled right back down. And now it's just traveling inside of that overall Friday trading range. Nothing wrong with that, but this is a perfect opportunity to make safe trades, no losses, and again, 60 pips here on the dollar Swiss. Let me show you the dollar yen. So the dollar yen gave us a HL30 to the upside, and this one only hit the first 20 pip target. So we only earned 20 pips. It didn't go to the second target up here. It sort of stalled and then rolled over. That'll happen sometimes, and it's often due to what the previous day's trading range was looking like at that particular moment when it set up. So Friday was a little tighter for the dollar yen, as opposed to, for example, the euro yen, or I'm sorry, the euro dollar or the dollar Swiss. Now, the pound dollar is moving in a little different manner. You can see that it's relatively tight. We did get an HL30, but it took a little while for it to reach that trigger, which is, again, what I mentioned, the previous day's high and the previous day's low price has to come up and approach the previous day's high or low within a specific range where it's not going to work. And it didn't happen here. So we had to wait a little bit later into the trading session, into the New York session, and that's when we got our entry, and we just simply traded it from the entry to the first 20 pip target. Now this one may continue for the rest of the day, and if it does, our second target is down here at 1.3208, which means at that point so far, we've earned 20 pips, but we could earn approximately 60 pips on this one as well, which means we would go from 160 for a total profit at this moment. If this one pays an additional 40 pips, then we would be at 200 points or 200 pips for the day if it hits that final target down here at 1.3208. We'll have to wait and see. We're still holding on to the second half of the position on this pound dollar trade, but so far we've already locked in the 20 pip target, the first 20 pip target, and there's no way that we can lose because we moved the stop loss to a break-even stop at this point to protect ourselves. So again, we've already locked in and banked 160 pips, but if the pound dollar goes down here to 1.3208, that would be an additional 40 pips for a total of 200 pips today. I'm not calling this out as a trade recommendation, so please, if you see this video on my YouTube channel or on my Facebook page, again, I'm not saying get into this trade and trade it to the 1.3208 target. I do not recommend chasing trades. This is one of the reasons why we protect our trades and trade it to the first 20 pip target and then to an additional 20 pip target, because sometimes they don't hit that second target for an additional 20 pips. Sometimes they just stop right here. So please be careful, just keep an eye on it. But if you want to learn how to do this with us, you can join into our group, 10xfx.co, and you can get instant access to learn how to use this and execute this strategy. And then you can join our private 10xfx Slack channel, and you're going to get all these trade recommendations and updates and charts, all kinds of videos, everything to help you make money every single day. Thanks for watching. I hope you had a good trading day.